We are awaiting yet more earnings this week. Franco-Nevada is set to report after the bell today. And of course, the Canadian budget looms tomorrow. Let's bring in Denis Taillefer, portfolio manager at Caldwell Investment Management. Denis, thanks very much indeed for joining us. Start off, if you would, with Franco-Nevada. Is that, a less volatile stock than the likes of a New Gold, but a favorite way among many to play gold?
It is. It's a very high quality company. If you're looking for a way to get exposure to gold and precious metals and do it in a way that's a lot less volatile, Franco-Nevada is a great way to do it. They're the largest royalty company, precious metal company in the world. They have well over 400 assets globally. So they're well diversified, fairly low risk, great balance sheet. So from a perspective of if you're looking for a core position in gold that you're going to hold for a very long period of time, Franco-Nevada would be probably a good way to go. We tend to play gold a little differently. Our Canadian strategy is a momentum-based strategy, so we look for very high, rich in catalyst type names. And so Franco-Nevada wouldn't necessarily fit the mold that we're looking for, but it's a high quality company and certainly makes sense if someone really wants a long-term position in gold.
Yeah, it's up about 56% this year, which sounds great, but the global gold index, the gold index in Toronto has doubled, so it has lagged some of those individual names. What do you, just to get the budget out of the way, what would you like to see tomorrow from the federal government?
Well, we have an opportunity here to really kind of reset how the Canadian economy is going to grow going forward. So we're really looking for policies that are really centered around growth. So we're hoping to see, some tax changes to from a policy standpoint. Some deregulation, so make it easier to get projects on the go, and as well, we'd really like to see a big incentive to try and draw investments back into the country. We've really fallen behind from a productivity standpoint in Canada, so we really need to try and get growth projects and the economy back on a growth projection. So we're really looking for policies that really focus on that. So we're expecting to see a fairly significant deficit. Having said that, I think the market will take it in stride as long as the policies are really focused on true growth. Then I think it will be well received by the markets.
You have some other stocks that are on your radar. Atkins Realis, what interests you there, Denis?
So Atkins, you had a guest on a little earlier speaking to Aecon and how well it's done in their exposure to the nuclear market. So Atkins is another of those names that has a very strong nuclear division. It was like 14% of the revenues a couple of years ago. This year, it's closer to 18. It's the fastest growing part of their book of business. Atkins is an engineering firm. We prefer the engineering business over construction just because there's a lot less risk to delivering on those projects. So a lot better visibility from a growth standpoint. Atkins is still kind of moving away from some of the construction projects they had on their books, but once they've cleaned that up, they're pure engineering. So we really like that space. The growth prospects across most sectors in engineering are very strong, the strongest being in nuclear. And Atkins has improved their balance sheet quite a bit, so we expect to see them kind of really re-enter the M&A field a lot more. So we should see a lot more growth through M&A. So we think they're just very well positioned here to see really good growth over the next few years, and they still trade at a slight discount, we think, to the overall market. They also have a few businesses that we think they can still kind of spin off. So there's still some divesting that they can do that will, I think, would be well regarded by the markets as well.
Swinging back to gold, K92 Mining has caught your eye. They produce in Papua New Guinea.
They have. So this really kind of fits a lot more our mold where we're looking for companies that have really strong catalysts. So this is a small cap company, about 4.5 billion. Most of their production is out of Papua New Guinea. They've had a few big projects they've had here where they're expanding their production. So their production profile is increasing quite significantly. They did about 140,000 ounces of gold last year. They're going to be well over 200 within the next couple of years. Their EBITDA set to more than double over the next 2 years. So there's significant growth kind of in place right now over the next few years. They have a very clean balance sheet, so they're basically financing that through cash flow. And there's a lot of exploration catalyst upside potential as well. So this is a company that has, even if the price of gold stays flat here for the next few years, there's a lot of growth, a lot of catalysts in this company. And as it basically increases that growth profile, it will move from a junior mining company to kind of a mid-size, mid-tier mining company. And we think that will draw a lot more investment attention, a lot more flows. And as you said right before this segment here, New Gold, I think, is being taken out. We expect to see a lot more M&A in the precious metals as well as in the copper side of things. And so we think this would be a very interesting takeout candidate given the very strong growth profile that they have.
Denis, thank you very much. Denis Taillefer joining us there, portfolio manager at Caldwell Investment Management.